Hello, warriors. Hope you're all doing amazing. Welcome to today's session, wherein we are going to have a quick and comprehensive revision of 5 chapters of CA intercosting in just 2 hours. We are going to cover almost 40 marks of CA intercosting in just 2 hours. In the next 2 hours, we'll be discussing the chapter Introduction, that is basics of costing, material costing, labor costing, overheads, and activity based costing. So, are we ready to begin the revision? Yes, everyone. Perfect. So, first, before getting into costing, we need to know why costing is important. For any business, their objective is simple: to produce goods, to sell the goods or services, and earn profit. To determine how much profit they've earned or what is the selling price at which they want to sell the goods, they want to know what is the cost they have incurred. The golden formula for any business in the world is sales minus cost is equal to profit or loss. Yes. So to know what should be the selling price or how much is the profit they have earned, they want to know what is the cost. What happens if cost goes wrong? If we have overestimated the cost, we overcharge the customers, and ultimately the customer will leave us and will go to the competitor. So we get out of the business. If we underestimate the cost, yes, we'll be charging very less to the customers, but we will be incurring loss and ultimately we will go bankrupt. So estimation of correct cost is very, very important. What is cost? In simple terms, the amount paid to get goods or services is called as cost. Simple. I went to a shop, I paid 10,000 to get a phone, 10,000 rupees is my cost. How do we tell that? It is the amount of resources given up in exchange of goods or services. Resources given up can be monetary, it can be non-monetary as well. Next, calculation of cost is not that simple. It's not as easy as give 10,000, get goods. Yes, in a business, so many indirect costs are involved. Say, for example, we have rent, depreciation, advertisement, electricity. Suppose we are manufacturing one laptop. For 1 unit of laptop, what is the electricity charge? What is the charge of rent? We are not in a position to distribute it on a one-to-one basis because a business has so many indirect costs. So what we need to do? We need to follow a systematic process through which we arrive at the total cost of manufacturing goods or services. This systematic process is called as costing. Yes. So what is cost? Amount of resources given up in exchange of goods or services. Individually, I have purchased material, I have paid 10,000 cost. I have paid for labor, 15,000 cost. What is costing? I combine all these and I calculate what is the total cost to manufacture a laptop, to manufacture a pen. For this, I follow a systematic process. This systematic process is called as costing. Clear? Now let's slowly get into the world of costing one by one. Firstly, we have the elements of cost. Any cost in the world can be bifurcated into either material or labor or expense. What is material? A tangible item having physical substance. What is labor? Wages, taxes, and benefits payable for the employees. And what is expense? It is the cost which is neither material nor labor. So we add material, labor, expense, we get the total cost. We've again discussed some cost can be called as a direct cost, which are directly traceable. Say, for example, to manufacture one laptop, I want one screen, I want one mouse. Again, there are some costs which are not directly traceable. I cannot form a one-to-one relationship, which are called as indirect cost. So every item we are going to bifurcate it as direct and indirect. So material can be direct material, indirect material. Labor can be direct labor, indirect labor. Expense can be direct expense, indirect expense. So direct material, direct labor, direct expense. Together, we call them as prime cost. Cost which is very important to manufacture the product, which is prime to manufacture the product or service. Yes, and indirect material plus indirect labor plus indirect expense, we call it as overheads. Cost which is incurred over and above the prime cost. Clear? So these are the elements of cost. Next, we went to classification of cost. First, we've learned classification of cost based on variability. Next, we've learned classification of cost based on functions. Based on variability, cost can be classified as variable cost, fixed cost, semi-variable cost. What is variable cost? It is the cost which varies with the level of output. Output increases, cost increases. Say for example, the cost of direct material. More we are producing, more is the cost. Fixed cost, it is the cost which does not vary with the level of output. Irrespective of how much we are producing, the cost will be the same. Say for example, rent. And we also have semi-variable cost which is partly varying with the level of output. Say for example, we have electricity. Electricity has a bare minimum 100 rupees per month. You use it, you don't use it, we have to pay 100 rupees. But more we use it, over and above 100 rupees, it goes on increase. Yes. Now, the elements of cost, yes, based on variability. Direct material, direct labor, direct expense. That is our prime cost will always be variable cost. Why? Because we are in a position to associate on a one-to-one basis. Yes, more will be the production, more will be the cost. Overheads, it can be variable cost, it can be fixed. Clear? Next, we have also discussed the classification of cost based on functions of an organization. So, any organization has mainly three functions. Yes, they are production, administration, selling and distribution. You want to produce the goods, sell the goods, and overall we need to administer the entire process if it is going properly or not. Again, bifurcation of cost. Prime cost, yes, direct material, direct labor, direct expense, it is always incurred for producing the goods or services. And overheads, it can be incurred for producing goods or services, it can be incurred for administering the process, or it can also be incurred for selling and distribution. Overheads can be for production overheads, administration overheads, and selling or distribution overheads. Yes. So combining all these three things, yes, we have the elements of cost: material, labor, expense. We have bifurcated as direct material, direct labor, direct expense, indirect expense. All direct costs together we are calling it as prime cost, and all indirect costs together we are calling them as overheads. Now, classification based on variability. Prime cost is always variable cost. Overheads can be variable cost, can be fixed cost. Based on functions, prime cost is always incurred for production of goods or services. And overheads may be incurred for production, may be incurred for administration, may be incurred for selling and distribution. Accordingly, they are called production overheads, administration overheads, selling and distribution overheads. Yes. So now we have all the elements of cost. We put them in a statement so that we get the total cost for producing goods or services. That statement is called as cost sheet. What is the simple format of a cost sheet? Direct material plus direct labor plus direct expense. We get the prime cost. We add the overheads. We add factory overheads, admin overheads, selling and distribution overheads. We arrive at total cost. Clear? Now let's slowly enter the world of costing. What all is there in costing? Firstly, we've discussed costing. It is a systematic process of ascertaining cost. Then we have discussed the elements of cost. We have direct material, direct labor, direct expense, and overheads. Next, costing can be done for existing goods or services. Costing can also be done for new goods or services. I can calculate the cost for existing goods or services. I can also estimate the cost for new goods or services, which I'm planning to manufacture in the future. For existing goods or services, what is it that I want to do? I want to firstly calculate the cost. What is the cost of manufacturing this pen? First objective. Secondly, I want to try and reduce the cost. Okay, my cost is 1500. Can I reduce it to 1300? Yes. So we have two objectives. Firstly, to calculate the cost. It is called as cost ascertainment. And secondly, to try and reduce the cost. It is called as cost control. For new goods or services, what is it that we are trying to do? We are trying to take a decision whether to manufacture it or not, whether to accept the offer or not, whether the price is feasible or not. So what is it we are doing for a new goods or services? We are taking a decision. We are making decisions. Yes. So for existing goods or services, to ascertain the cost, to calculate what is the cost of manufacturing goods or services, we have the different methods of cost based on different industries. What are the different methods of cost? We have job costing, contract costing, service costing, We have process costing, batch costing, unit costing. What is the difference when what is applied? We will discuss this in detail later on in the upcoming chapters, but now just an overview: when to apply what, when to not apply. Yes, if the goods or services which we are providing, yes, if it involves service, yes, methods of costing: if it involves service, if no service is involved. If service is involved, yes, either we are providing goods plus service or we are only providing service. We should ask whether it is a general service or it is a specific service. General service is a service which is applicable for all the people. Yes, I go on a bus, you go on a bus, other person goes on a bus. It is the same service to all the people. If it is the general service, service costing will be applied. If it is a specific service, yes, I go to a doctor, I tell my illness. As per my illness, he is giving me the treatment. He is not giving me some general treatment. Yes, if it is a specific service, again we have two bifurcations. We ask what is the duration. If the duration is up to 1 year, we apply job costing. Yes, we treat it as separate job and apply job costing. If the duration is more than 1 year, yes, the duration is more than 1 year, the revenue is for more than 1 year, we want to distribute the profit, we want to apportion the cost, profit and revenue, so we will be applying contract costing. Yes, service is involved, general service, service costing; specific service, up to 1 year, job costing; more than 1 year, contract costing. If no service is involved, it is only goods which are providing. Yes, we ask the question whether goods are manufactured in multiple processes. If yes, process costing will be applied. No. We ask whether the goods are manufactured in batches. If yes, batch costing will be applied. None of them is relevant, then we will be applying unit costing. Clear? This is the 6 methods of costing for calculating the cost, that is for cost ascertainment. Next, we have cost control. What is it we are trying to do? We take our actual cost, compare it with our benchmark, and then see why our cost is more. How can we reduce our cost? For this, we have two techniques. We have standard costing, we have budgetary control. In standard costing, we compare the standard performance with actual performance. In budgetary control, we compare budgeted performance with actual performance. Yes, in the last year, I purchased materials for 1000 rupees. So I think I can purchase the material for 1000 rupees in this year also. That is budget. Yes. What is standard? Right now, if I place the right bid, I look at all the suppliers and see where I'm getting the materials for the least price. I can get it for 1500. That is the standard. And actual, what is the price I've actually paid? 2000 rupees. This is the actual. Comparison from 1000 to 2000 is budgetary control. Comparison from 1500 to 2000 is standard costing. Standard costing is on present basis. Budgetary control is on historic basis. Standard costing, responsibility assignment is possible, but in budgetary control, it is not possible because it is based on historic basis. Yes. So for existing goods or services, cost ascertainment, we've discussed the methods of costing. Cost control, we've discussed standard costing and budgetary control. For new goods or services, what is it that we are trying to do? We are trying to take a decision whether to manufacture or not, whether to accept the offer or not, whether the price is feasible or not, and what is the principle on which decisions are taken. We take decisions on the principle of marginal. Clear? Yes. Now, yes, we have discussed everything. Let's put everything in one single master chart, the world of costing. All 15 chapters of CA Inter costing put in one single master chart. Firstly, what is costing? It is the systematic process of ascertaining cost. What are the elements of cost? We have direct material, direct labor, direct expense, and overheads. Then costing can be done for existing goods or services, can also be done for new goods or services. For existing goods or services, we have two objectives. First is to ascertain the cost. What is the cost? Second is to try and reduce the cost. That is cost control. For new goods or service, we are trying to take a decision, and decisions are made on the principle of marginal costing. For existing goods or services, for cost ascertainment, we have different methods of costing. What all we have? We have job costing, contract costing, service costing. We have process costing, batch costing, output costing. Cost control. we want to try and reduce the cost, we have two techniques. One is standard costing, one is budgetary control. Now again, coming to overheads, there are two methods of distributing overheads. One is the traditional method of distributing overheads. We also have a modern method of distributing overheads, which is called as activity based cost. Clear? Then we have all elements of cost. We have direct material, direct labor, direct expense, overheads. We put them in the form of a statement to arrive at the total cost. This is called as cost sheet. Yes. Now we want to calculate what is the total cost. To get the cost, we need to record the items of cost. Here I've paid 10,000, here I've paid 20,000. Everything needs to be recorded. Only then we can calculate. So we want to record all items of cost. For that, we are doing cost accounting. Yes. And in process costing, suppose in a process, multiple products have emerged. Say we are refining petroleum products. Yes. We get petrol, diesel, Vaseline, plastic, so many more products. So what do? We apply the technique of joint product by product to distribute the cost between various. Yes. So we have all 15 chapters of costing in one master sheet. Firstly, we have the introduction to costing. Then we have direct material. Then we have direct labor. Direct expense is not a chapter as such because it is a very small item. Then we have overheads. Then a new method of distributing overheads. We have activity based costing. Then all items of cost put in the form of a statement. We have cost sheet. Yes. To get details of cost, we have to record the cost. We have cost accounting. Cost can be done for existing goods or services. For existing goods or services, we want to calculate the cost. For that, we have methods of costing. We have job costing, batch costing, yes, output costing. These three chapters are put in one single chapter. We have contract costing, we have service costing, we have process costing, 11 chapters. And in process costing, if multiple products emerge, we have joint product by product. Next, for cost control, to reduce the cost, we have standard costing, we have budgetary control. And for new goods or services, take a decision, we have the concept of marginal. This is all 15 chapters of costing input in one single master sheet. Clear, students? So we are moving into the next chapter, that is material costing. On an average, we'll be having 9 marks from this chapter, a very important chapter from the exam perspective. First, we'll be discussing EOQ and related costs. So when we are purchasing material, what is our objective? Yes, we have two different objectives, which is that you'll have to tell me whether our objective is to reduce the purchase cost of raw material or is it to reduce the total cost of raw material. Yes, our objective is to reduce the total cost of raw material. So what all we have in total cost of raw material? We have the purchase cost, have the ordering cost, we have the carrying cost. What is our objective? We should purchase in such a way that our total cost of raw material is the very minimum. Now, suppose at home in a year we want to buy 300 kg of rice. Yes, in a year altogether we want to buy 300 kg of rice. That is the annual demand of raw material. How can we buy 300 kg of rice? We have different combinations. I can go today buy the entire 300 kg, or else every month I can buy 30 kg, 30 kg, 30 kg, 30 kg. I can do for 10 months. Yes, or else I can buy 15 kg, 15 kg, 15 kg, 15. Yes, so different options are available, different alternatives are available wherein we can fulfill the total demand of raw material. What is our objective? At what alternative our total cost is minimum. Yes, suppose we want 300 kg of rice in a year. We can buy 300 kg at once and buy only one time, or else we can buy 30 kg and buy 10 times. Yes, get 300 kg. So what is our objective? What is that order quantity? Every time I'm going to supplier, how much should I order so that my total cost of raw material is minimum? Yes, firstly, ordering quantity into number of orders gives us the total demand of raw material. Yes, ordering quantity. Every time I buy 30 kgs, 30 kgs, 30 kgs, into how many times I'm doing it in a year? I'm buying rice 10 times in a year. So it is 30 kg into 10 gives me 300 kg, which is the total demand of raw material. Yes, we'll go into the cost items one by one. Firstly, we have the purchase cost of raw material. What is the purchase cost of raw material? It is the amount paid to supplier to buy the raw material. How do we get the purchase cost of raw material? It is nothing but cost per unit into number of units. Yes, again, if there is no discount, purchase cost will be the same in all alternatives. Hence, it becomes irrelevant for decision. Next, we have the ordering cost. What is the ordering cost? It is the cost associated with ordering raw materials. Every time to buy rice, I need to go to the shop on an auto. I have to pay 30 rupees for that. Every time I'm placing an order, I have to incur this. This is ordering cost. How do we get the ordering cost? It is ordering cost per order into number of orders. Yes, ordering cost per order will be given in the question. How do we get number of orders? Yes, we've already discussed this. In a year, total I want 300 kg rice, and every time I go, I buy 30 kg, 30 kg, 30 kg. So how many times I'm going and placing orders? 10 times. How do I get it? It is nothing but the total demand of raw material divided by ordering cost. One interesting observation. Yes, suppose I went to shop today, I bought entire 300 kg today. I have to pay just 30 rupees once. Yes, my total ordering cost is only 30 rupees. But I go buy 30 kg, 30 kg, 30 kg. I buy 10 times. So I have to pay 30 rupees into 10, 300 rupees. So what is the observation? If the ordering quantity increases, yes, today only I buy and today only I go and buy the entire 300 kg. Number of order decreases. I should go and buy only one times. If the ordering quantity increases, number of order decreases, and hence ordering cost will also decrease. So there is an inverse relationship between ordering quantity and ordering cost. Next, we have the carrying cost. It is the cost of holding the inventory in stock. Say we have the storage cost, we have the interest cost, we have the obsolescence cost. All these are carrying cost. One thing to be kept in mind, carrying cost depends on two factors. What are they? First is the number of units which we are holding. Second is the period for which we are holding. Yes. Suppose I'm holding only one unit, the cost is less, but I'm holding 100 units, the cost is more. Yes, I'm holding the goods only for 1 month, the cost is less, but I'm holding them for 1 year, the cost is more. Yes, so depending on this, we give the name carrying cost per unit per annum. To hold one unit for 1 year, what is the cost? Generally, it will be given as a percentage of purchase price. Suppose it is given as 10% of purchase price. If the purchase price is 100, the carrying cost per unit per annum will be 10% of 100, that will be 10 rupees. Now, getting to the total carrying cost. How do we arrive at total carrying cost? It is nothing but carrying cost per unit per annum. Yes, what does it mean? To hold one unit for 1 year, what is the cost? Into, I multiply by number of units which I hold throughout the year. Yes, why I want throughout the year? Because here the cost is to hold one unit for 1 year. Yes, so I am multiplying it with the units which I have held throughout the year. Suppose I tell the cost to hold one unit for 1 year is 10 rupees and I hold 10 units throughout the year. Yes, my total cost comes to 100. And what is the number of units held throughout the year? Yes, it is nothing but our average inventory. Yes, sometimes, yes, we order the goods, yes, we go on consuming, it becomes zero. Again we order, go on consuming, it becomes zero. Again order, it becomes zero. So what is it that we on an average hold throughout the year? Is nothing but our average inventory. And how do we get average inventory? It is ordering quantity divided by 2. Suppose at home we are buying 30 kg. So what on an average we will be having throughout the year? On an average throughout the year we will be having 15 kg of rice. Clear? Again, one more relationship. Yes, ordering quantity increases. When the ordering quantity increases, average inventory increases. And when average inventory increases, carrying cost increases. So there is a direct relationship between ordering quantity and carrying cost. Clear? So what is our objective? Our objective is to get the total cost of raw material at the very minimum. Yes, now there can be two scenarios. Firstly, there is no discount, that is purchase cost is the same. Secondly, there is discount, that is purchase cost is not the same. If there is no discount, then purchase cost becomes irrelevant, because in every alternative, the cost will be the same. So how do we take a decision? We take a decision on the total of ordering and carrying cost. The alternative at which the total of carrying and ordering cost is minimum will be our economical order quantity. Yes, how do we get it? We have the EOQ formula through which we arrive at this. If purchase cost is not the same, that is discount is involved, purchase cost is also varying, so purchase cost is also relevant. So how do we take a decision? We take the decision at that order quantity wherein the total of three cost is minimum. How do we get it? We get it by trial and error method. Firstly, if purchase cost is not the same, yes, we get that order quantity at which total of ordering and carrying cost is minimum. Firstly, arriving at EOQ through graphical method. Yes, we've discussed that. Yes, when ordering quantity increases, carrying cost increases. And when ordering quantity increases, ordering cost decreases. This is that point, yes, wherein ordering cost is equal to carrying cost, wherein the total cost is minimum. So this order quantity will be an economic order quantity. So at economic order quantity, our total ordering cost will be equal to total carrying cost. How do we get it? Through a formula. EOQ is equal to square root 2AO divided by C, wherein A is the annual demand of raw material, O is the ordering cost per order, C is the carrying cost per unit per annum. This is a fast revision batch, so we are not getting into derivation of the formula. Some important things from the exam perspective wherein students generally make a mistake, wherein students generally confuse things. Firstly, calculation of carrying cost per unit per annum. Generally, it will be given as a percentage of purchase price. But there can be scenarios wherein it is directly given, telling carrying cost per unit per annum is rupees 2. If only percentage is given, yes, telling it is 10%, we do purchase price into percentage, we get the carrying cost. If only per unit is given, telling storage cost is rupees 2 per unit per annum, we take it directly. If both are given, we add the percentage as well plus the rupee value as well. That is purchase price into percentage plus whatever is the rupee value given. We arrive at the carrying cost per unit per annum. Next, if demand of finished goods is available, what we want to see how many units of raw material we are buying. So if demand of finished goods is given, we need to arrive at the demand of raw material. Next, total variable cost of inventory. If question is telling you total variable cost of inventory, total raw material cost, total inventory cost, all these means the total of purchase cost, ordering cost and carrying cost. Next, number of deliveries or number of orders. Yes, how do we get the number of deliveries or number of orders? It is nothing but what is the total demand? Yes, that is the annual demand. Yes, in a year I want 300 kg divided by every time I place 30 kg each. That is ordering quantity. I get the number of deliveries or number of orders. Ordering is from the customer. Customer is placing the order. Delivery is from the supplier. Yes, both are one and the same. Next, we have the time between two orders. Suppose in a year, yes, we are placing 10 orders. Yes, number of orders is equal to 10. So I want to know what is the time gap between two orders. How do I get that? Yes. So in a year, in 365 days, I have placed 10 orders. So for one order, how many days? How do I get it? It is 365 days or 12 months or 52 weeks divided by number of orders. Yes, one more thing to be kept in mind is that data should be uniform. Every data should be on a per annum basis. Demand of raw material should be the annual demand. Carrying cost should also be on per unit per annum basis. We've also looked at a comprehensive question wherein the annual demand was not available, but using the basic relationship at EOQ, ordering cost is equal to carrying cost, we have arrived at the annual demand of raw material. This is calculation of EOQ when there is no discount. Secondly, when discount is available. Yes, So purchase cost is also relevant, ordering cost is also relevant, carrying cost is also relevant. So what is it that we have to do? For every offer by supplier, we have to calculate the total cost. And whatever is the alternative wherein the total cost is minimum, we are going to choose that alternative. Yes, important points to be kept in mind. Firstly, it is the calculation of carrying cost per unit per annum. Yes, if carrying cost per unit is given, directly carrying cost is told as rupees 2 per unit per annum. Yes, whether it is the original price, discounted price, we are going to take this amount. But if carrying cost is given as a percentage of purchase price, now purchase price is varying, so carrying cost will also keep varying. So we have two different scenarios. Firstly, question itself tells that carrying cost is constant. Yes, question itself tells that carrying cost is constant. Then we will not change the carrying cost. But if question is silent, question is not telling whether there is a change in carrying cost, whether there is an increase or decrease, then we will keep on varying the carrying cost depending on our purchase price. Yes, one important thing to be kept in mind. Secondly, when discount is given in a range, yes, suppose supplier is telling if you buy up to 500 units, your cost is 1500. 500 to 1000, it is 1400 and so on. So what is it we have to do? We cannot calculate for every order quantity. So in the first range, we can take any round value. Say it is less than 500, I can take 100, 200, 300 or 400. But in all subsequent ranges, we will be taking the lowest value. That is what ICAI is following, and that is what we will also be following to get proper marks in the examination. Then this is the first concept, EOQ and related concepts. Clear? Going to the next concept, inventory levels and related concepts. Yes, it answers the question when we should place order for raw material, how much units of raw material we should have, how much time the supplier takes to deliver the raw material. All these things has to be kept in mind. Yes. So what are the factors to decide when to place order for raw materials? Firstly, it is the time taken by supplier to deliver the goods. Suppose our supplier is taking 3 days to deliver the goods. We want to order rice at home. And how much quantity we are using in that period. Suppose daily we are using 2 kg per day. So it tells when we have 6 kg at home, we have to place order for raw material. Firstly, we have the basics. First, we have the reorder period or the lead time. What is reorder period or lead time? It is the time taken by supplier to deliver the goods from the date of placing order. Today, I have placed the order. After 3 days, he is giving the goods. This period is called as the lead time or reorder period. Sometimes it can be given in range. Say, for example, Amazon is telling your goods will be arrived in 6 to 8 days. So we have the maximum lead time 8 days, minimum lead time 6 days, and the average lead time 5 days. Yes. Then we have the consumption speed or usage rate. What does it tell? It tells the rate at which we consume raw material. Suppose daily at home we are consuming 2 kg rice. That is the consumption speed, the rate at which raw material is consumed. Again, it can be in range. We may have maximum consumption speed, average consumption speed, and minimum consumption speed. Next is the reorder quantity. It is the quantity for which we place order with the supplier. Suppose every time I go to shop, I buy 30 kg of rice. This 30 kg is the reorder quantity. Yes, based on 3 basic items, let us first discuss the inventory levels. Firstly, we have the reorder level. Yes, what is the question it is trying to answer? At what point we should place order for raw material? We should place order for raw material in such a way that even if you do maximum consumption, still there is no stock out. How do you get that? Yes, reorder level is equal to maximum lead time into maximum usage rate. Yes, we've discussed this already. Suppose it takes 3 days and every day I want 2 kg per day. So I have to place order when I have 6 kgs with me. Yes, 3 days. Suppose it may take 3 to 5 days. I want to cover maximum so that even if I consume maximum, there is no stock out. Yes, so it is maximum lead time into maximum usage rate. If safety stock is given, what is safety stock? It is the extra stock which is maintained for contingency. So what we tell is, for contingency, suppose anything abnormal happens, we have certain safety stock kept in hand. So we will place order when we have, yes, safety stock will always be available with us. Say in home, mom has kept 5 kg of rice separately, plus we take average usage rate into average lead time. When we have safety stock, we only take average. Why? Because for unforeseen circumstances, we have extra safety stock in hand. Yes. So reorder level, first, when there is no safety stock, it is maximum lead time into maximum usage rate. We want to cover every circumstance. If we have safety stock, we have for unforeseen circumstances safety stock. It will be safety stock plus average usage rate into average lead time. Next, we have the minimum level. What is minimum level? It is the minimum quantity which is generally maintained throughout the year so that there is no stoppage in production. Yes, one thing to be kept in mind, we will be having the minimum and the maximum level on the day of receiving goods. Yes, that is before receiving the goods, we will be having minimum level. After receiving the goods, we will be having maximum. How do we get minimum level? We have reached the reorder level, we've ordered from the supplier, but it is taking some time. So we go on consuming on an average. And immediately before receiving the goods, what is the average we will be having throughout the year? This is the minimum level. How do we get it? It is the reorder level minus on an average we are consuming. So it is minus average lead time into average usage. Clear? Then we have the maximum level. What does maximum level mean? What is the maximum we can hold at any particular point of time? Again, we have reached the reorder level, we have called the supplier, we have ordered the goods, we consume, but we consume very less and we get fresh goods, so it reaches the maximum level. How do we get it? Reorder level minus minimum lead time into minimum usage rate plus reorder quantity. Yes. Then we have the average level. Yes. Average level can be calculated as minimum level plus maximum level by 2, or one more way to look at it is minimum level plus half of reorder quantity. What is the second formula? Minimum level is there throughout the year, so no need to take average. What varies is only the reorder quantity. So just take half of reorder quantity. Minimum level throughout the year plus half of reorder quantity can also give us the average level. In exam, both these things we should do if question asks us to calculate the average level. Danger level. What is danger level? It is that level wherein the goods are very less and we are on the verge of stock out. So we have to take immediate action. How do we get danger level? It is the lead time for emergency purchase into average usage rate. Lead time for emergency purchase. If I'm buying an emergency purchase, on an average, I'll be getting goods in 4 to 6 days. But I'm willing to pay extra in how many days the supplier can deliver. He can deliver it to me in 2 days. So 2 days into average usage rate, suppose 2 kg per day, 4 kg is the danger level. Yes. Sometimes instead of average usage rate, minimum usage rate can also be used. In exams, it is preferred to write both these in the examination. Clear? One important thing to be kept in mind is what is the usage rate and what is the lead time. Both data should be uniform. If usage rate in days, yes, then the lead time should also be in days. If one is in weeks, other should also be in weeks to ensure the data is uniform. Clear? Yes. We have the third concept, material turnover ratio. Yes. Why do we use material turnover ratio? To see whether the material is fast moving or whether the material is slow moving. How do we see? If in very less money, we can do maximum turnover. Suppose I have two businesses. First business, yes, using 10,000 rupee investment, I can create a turnover of 10 lakh. Second business, I take 10 lakh rupees to generate a turnover of 10 lakh. Which is better? The first business, because in very less investment, I'm doing a very big turnover. So how many times I've rotated my investment? It is 10 lakh divided by 10,000, which gives me 100 times. Yes. So how do we get the material turnover ratio? Yes. In the numerator, we take the total turnover of material. That is the material consumption. What is the material I have consumed in a period? In denominator, I take my investment. What is the money which I've invested in stock? That is nothing but my average inventory, average stock, which is the money which I have invested throughout the period. So material consumption divided by average stock gives me the material turnover ratio. Yes, and material turnover ratio is written as dash times. Suppose it is 365 times, 10 times, 15 times. What it means? The average stock I have rotated 15 times to arrive at the total material consumption. Yes, material turnover ratio is equal to cost of raw material consumed divided by average stock. How do we get the cost of raw material consumed? It is nothing but opening stock plus purchase minus closing stock. And how do we get the average stock? Yes, it is nothing but opening stock plus closing stock divided by 2. Yes, we have another small concept, that is material holding period. Yes, suppose I am telling in 365 days in a year, I have rotated the material 10 times. So for one time, how many days I've held the material? How do I get? Is 365 days or 52 weeks or 12 months divided by material turnover ratio. Clear? Next, we have the fourth concept, that is stores ledger and its related concept. Yes, what is stores ledger? Yes, whatever is the material we are getting, we keep it in a separate place called as stores. From stores, material will be issued to production. What is it that we want to see? How much material is received in stores? How much is issued from stores? And what is the balance available in stores? Yes, in terms of what is the rate at which it is available, how much quantity is available, and what is the total amount of material buying in. Yes, this is the format of stores ledger. We write date, particulars, receipts, issues, and balance, and for everything we write what is the quantity, what is the rate, what is the amount. We are going to discuss this in the form of points to remember. Firstly, always writes the dates in the chronological order. If question is not giving it to you in chronological order, first step is to write dates in the chronological order. Next, for receipts, for receipt of goods, we are getting goods from supplier. Yes, the specific rates will be given. Suppose I have purchased from supplier 1 at 100 rupees, supplier 2 at 102 rupees. Specific rates will be given. We are going to use that. Yes, issue of material. Suppose I have two material. One is purchased at 10 rupees, one is purchased at 12 rupees. I am issuing 500 units. Out of which material I have issued this? Yes, it is difficult to calculate. So we adopt the method of valuation, which can be either FIFO or weighted average. In FIFO, what is it that I tell? Yes, whatever is the goods I have received first, that I'll issue to production first. Suppose first I have received goods of value 10 rupees. First, I will issue that to production. Yes, whatever is the balance, I'll put it in balance column. In weighted average, we are telling, don't worry so much whether you purchased for 10 or 12 or 15 rupees. Calculate the weighted average rate. That is total cost divided by total units. You get the weighted average rate. Using the weighted average rate, calculate your issues, calculate your balance. Yes. Next is, after every transaction, balance has to be applied. Yes. After every transaction, balance has to be updated. In FIFO, we want to know individually what is the rate and what is the quantity. So rate wise and the respective quantity will be put in balance column. But in weighted average, we don't want rate wise. We just want the weighted average single rate. So total quantity and what is the weighted average rate, that will be taken. Yes. Next, in case of inter-job or inter-departmental transfer, it is just happening between the production departments. The goods are nowhere coming to the stores. So there will be no impact in stores ledger. Next, if goods are returned from production department to stores department, in stores department, what is happening? We are receiving the goods, so it will be treated as receipts. Finally, if we have any difference between book quantity and actual quantity, yes, in the books, it is showing that I have 10 kg, but in actual, I only have 2 kg. What happened to the balance 8 kg? It is shortage. It is issued somewhere. Where it is issued, we don't know, but it is issued somewhere. So we will be treating it as issued. Now, where it is issued, there can be two reasons for this shortage. First is normal reasons, that is uncontrollable. Second is abnormal reasons, that is controllable. Shortage of goods will be treated as issue. Yes, it can be because of abnormal reasons, that is controllable. It can be because of normal reasons, that is uncontrollable. What is uncontrollable? Suppose we have some evaporation. We have purchased kerosene and kept it there. Some amount has evaporated. It is uncontrollable. We cannot do anything. So what we are going to do, that we have the golden rule of costing. Yes, whatever is normal cost will be included. Whatever is abnormal cost will be excluded and transferred to costing P&L. So if it is because of abnormal reasons, it will not impact the normal cost. We are going to take that amount, transfer it to costing P&L. But if it is because of normal reasons, then what we are going to do, we will inflate the price of balance raw material. Suppose we have purchased petrol at 100 rupees and ultimately we are only getting 900 ml. So what we will tell, ultimately it is not 100 rupees for 1 liter, it is actually 110 rupees for 1 liter. That is what we will be telling. Yes, so if it is because of normal factors, we will inflate the price of balance quantity. If it is because of abnormal factor, the amount will be transferred to costing P&L. Yes. So here is the shortcut on how to do it in the examination. Yes, if it is because of abnormal factor, in the issue column, we write the quantity, we write the rate, we write the amount, and from here, from stores ledger, we eliminate that amount and transfer it to costing. But if it is because of normal factors, we want the cost to be still lying in stores. Only the quantity is not there. So we only write the quantity. Rate and amount, we will write it as nil in the issue column. In the balance column, if it is because of abnormal factors, we write the actual quantity, we write the original rate, and based on that, whatever is the amount we get, we are going to write it. Yes. If it is because of normal factors, we want the total cost to be there and this total cost to be absorbed by good units. So based on that, we get the inflated rate, yes, to cover the whole cost. Then we have the miscellaneous areas. First is the calculation of material cost. Yes, two golden rules to be kept in mind. Firstly, if there is any abnormal item, it will not impact cost. Secondly, if credit is available against the cost, then it is not cost. What are the special items to be kept in mind? Firstly, we have discount. Trade discount or quantity discount, yes, we will deduct it. Subsidy grant incentive, we will deduct it. If we have cash discount, it is not allowed for purchase of material, it is for prompt payment, so no deduction will be available. Then in case of taxes, yes, if credit is available, it is not cost. No credit is available, it is cost. GST, if credit is available, no cost. No credit is available, it is cost. Yes, other taxes, generally no credit would be available, so it will be cost. Penalty, demurrage, detention charges, fines, these are abnormal items, so these are not cost. Then we have the cost of containers. Yes, containers can be non-returnable containers or they can be returnable. If they are non-returnable containers, yes, the cost will be absorbed, so they will be treated as cost. If they are returnable containers, supplier is telling, you take this now, you pay me in advance, you return it later. Ask whether full refund is available. If full refund is available, it is not cost. If only partial refund is available, the balance amount will be treated as cost. Then we have freight inward, insurance, commission. They're treated, yes, they're incurred for purchase of raw material, so they'll be treated as cost. Then we have the shortage. If shortage is because of abnormal factors, they will be transferred to costing P&L. But if shortage is because of normal factors, what is it we are going to do? We are going to inflate the cost of good units and absorb that cost within the good unit. Then we have ABC analysis. This is for selective control of stock. We tell that there are some high value items, there are some low value items. For high value items, we need to pay more attention, more caution, more resources. So how do we categorize goods as A category, B category, C category? Yes, based on percentage value and percentage quantity. Yes, in terms of percentage value, A category will be the top 70%, B category the next 20%, C category the next 10%. In terms of percentage quantity, A category is only the 10%, B category is the next 20%, C category is that big 70%. Yes, then we have one final concept, stock out cost. What is it? This is what is the total cost company is incurring because of stock out. Yes, we have one typical question in the study material. We have illustration number 7, a very important question from the exam perspective. Company incurs two costs. Firstly, we don't have goods. Yes, customer comes and asks for goods, we don't have. So we lose the profit. It is called as stock out cost. Secondly, we don't want stock out. So we keep so much raw material in stock. Yes, we have kept so much raw material in stock. To hold them, we have to incur the carrying cost. Yes, second cost is carrying cost. What we should do, we should select that alternative wherein our total cost is minimum. How do we get stock out cost? It is stock out units, how many units we are losing, into loss per unit. But in the question, yes, they will give, there is a probability that customer will come and ask for 100 units. It is 2%. Customer will come and ask for 50 units. The probability is 5%. So it is stock out units into probability percentage into loss per unit. It will give us the stock out cost. And carrying cost, you know it is carrying cost per unit per annum into average inventory. Here, to avoid stock out, we are holding safety stock. Safety stock will be held throughout the year. So in place of average inventory, we take into safety. Yes, this is the complete chapter of material costing. Every concept, every main adjustment from the exam perspective is discussed here. We are now going to the next chapter, that is labor costing. Again, an important chapter. On an average, 9 marks will be there from this chapter in the examination. This chapter falls in the A category. Let us discuss the first concept, that is labor turnover ratio. We know that in any given period of time, the number of employees will never be the same. There will always be some employees who are coming into organization, some employees who leave the organization. What is it that we want to calculate? We want to calculate the rate of change of employees in an organization. So what is labor turnover ratio? It is the change of employees divided by average employees into 100. This gives us the labor turnover ratio. Now, change of employees. Yes, some employees would have left the organization. Some employees would have separated from the organization. That is separation. Their place, some new employees would have come into the organization. That is new accessions into the organization. So change can be because of separation, because of accession. In case of separation, what all can happen? Yes, some employees may have left the organization on their own. And for some employees, we may have discharged them from work. Yes, separation can be employees left, employees discharged. Accessions, new addition to employees. It can be employees replaced. Yes, some employee has left the organization. In his place, we are replacing a new employee. Or else it is an employee for new fresh post. There is a new post coming in. We are starting a new product. For that, we want employees. For that, we are recruiting employee for fresh post. So change in employees, it can be separation or accession. Separation can be employees left, employees discharged. Accession can be employees replaced or employees for fresh post. Yes, and average number of employees is opening employees plus closing employees divided by 2. Employee separation is employee left plus employee discharged. Employee accession is employee replaced plus employee for fresh post. We have different methods of calculating labor turnover ratio. We have separation method, replacement method, flux method. Separation method, we compare the employees separated with average employees. That is employees separated by average employees in 100. Replacement method, we compare employees replaced with average employees. That is employee replaced by average employee into 100. And then we have the flux method, wherein we see the total change in workforce. That is employees separated plus new accession divided by average employees in. Yes, one main relationship to be kept in mind, labor turnover ratio as per flux method is always greater than or equal to separation plus replacement. Yes. Next, we have calculation of equivalent labor turnover ratio. Suppose labor turnover ratio for 1 month is 3%. What is it for 1 year? Simple. 3 months for 1 month into 12 months, we get the equivalent labor turnover ratio per annum. Next, we have what is the total cost company is incurring due to labor turnover. We incur so many costs. We incur settlement cost, recruitment cost, training cost. New employees has not produced the goods properly. We have to rectify them. cost of rectification, and because one employee has left and another employee has not joined, there is that time gap in between. There will be some unproductive hours. Yes, in that we will lose contribution. Yes, what is this contribution lost due to unproductive hours? If the original employee was there, yes, he would still be producing goods, we would sell the goods, we would have made profit. Because the employee was not there, we could not produce, we could not sell, we could not make profit. This profit is also our cost. This is also something we are losing. So this will also be considered as total cost to company due to labor turnover. Yes. Next, we have the labor remuneration system. How do we make payment to employees? Yes, we have two main methods of wage payment. Firstly, we have the time rate. It tells for how many hours you're working, you'll be getting the payment. That is hours worked into rate per hour. Then we have the piece rate, which tells how many pieces you're producing. For that, you'll get the rate. That is number of pieces produced into rate per piece. And then what is the relationship between rate per hour and rate per piece? Suppose in an hour, yes, for an hour, employee is paid 100 rupees and employee is expected to produce 4 units in an hour. So what is the rate per piece? It is 25 rupees per piece. How did we get that? It is rate per hour divided by units manufactured in an hour. We get the rate per. Next, we went into the calculation of efficiency. Suppose there is one student who solved 50 questions in 5 hours. There is another student who solved 60 questions in 10 hours. Who is better? Yes. Efficiency calculation depends on two factors. One is the output produced, one is the hours taken. Yes. So if you want to compare one, other should be constant. Yes. If we tell, okay, both of you study for 5 hours and show me. Yes. Student 1 is solving 50 questions, student 2 is solving 40 questions. Now we can tell student A is better. Or else we tell them both, you both solve 100 questions. Yes, student 1 is taking 10 hours, student 2 is taking 12 hours. So we tell he is taking less time, he is better. Yes, so to compare one, other should be constant. Firstly, we are comparing the output when ours is the same. We are telling, yes, so we were expecting you to produce 8 units, but you have actually produced 12 units. You're so amazing. You're so efficient. How do we get? This actual output is more than standard output. It is always better. Yes, it is the mark of efficiency. So how do we get? It is actual output divided by standard output. Yes. In terms of hours, if you are measuring in terms of hours, we are telling, okay, to manufacture 10 units, we had given you 10 hours, but you have done the work in 8 hours only. Yes, actual time less is better. Standard time more is better. So how we create the formula? It is standard time divided by actual time gives us efficiency. Yes, no need to by heart the formula. Understand the logics. Formula comes by itself. Then we are going to discuss the various incentive plans. How do we incentivize our workers? Yes, total wages will be equal to TAM rate plus bonus. TAM rate will be paid to all the employees, but the bonus is paid only to efficient employees, employees who have saved us some of our time, some of our cost. Yes, we have Halsey premium plan, we have Rowan premium plan. Let us see what these plans tell. Yes. Halsey premium plan tells, okay, for every employee you pay the TAM rate, plus for efficient employees you pay the bonus. You ask how much bonus we should pay. Halsey plan tells you pay them 50% of cost saving. Whatever is the cost saved, 50% you give to employees, 50% you keep it with yourselves. How do we get cost savings? Yes, it is nothing but hours saved into rate per hour. So total wages is time rate plus 50% of cost savings. It is 50% into time saved into rate per hour. Then we have the Rowan plan. Rowan plan is also more or less the same thing. It is telling time rate you give to everyone. Bonus you pay only to the efficient employees. Now we ask, how do we pay bonus? It is telling you pay it based on time saved to time allowed percentage of basic wages. I'll tell you. Suppose 10 hours is allowed to do the work. Yes. And for 10 hours to do the work, yes, it is time allowed. We have saved 1 hour. You're telling pay him 1 by 10. Or in 10 hours, you have saved 3 hours. Pay him 3 by 10. In 10 hours, you've saved 5 hours. Pay him 5 by 10, 50%. Yes, that is the ratio. More is the time he is saving, more will be the bonus we are going to give him. And what is this bonus based on? Yes, the bonus is based on his time rate. Whatever he is getting for the hours he is working, as a percentage of this time rate, he will be getting the bonus. So what is total payment as per Rowan scheme? Firstly, we will pay him the time rate plus bonus. How do we get? It is time saved by time allowed into time rate. Next, let us have a look at what is the difference between Halsey and Rowan. Yes, the percentage. In Halsey, we are giving every employee standard 50% as bonus. In Rowan, what it depends on? It depends on time saved by time allowed percent. Percentage of what amount, right? In Halsey, we are paying them 50% of cost saving, whatever is the cost saved, that is hours saved into rate per hour. In the Rowan scheme, what is the amount on which we are paying them the percentage? We are paying them the percentage on time rate, that is whatever is the hours worked into rate per hour, that is nothing but a basic wage. Yes, so this is the difference between Halsey and Rowan. Firstly, in terms of proportion, and secondly, in terms of what amount we are paying the percentage. Yes. Next, we have a theory question telling which scheme is better. We have to analyze from two different perspectives, from a financial perspective, from a non-financial perspective. From a financial perspective, wherever company is incurring the least cost, that will be better. Yes, it can be either Halsey or Rowan. But from a non-financial perspective, we should always tell that Rowan is better than Halsey. Why? 3 points. Firstly, entire gain of improved production will not go to workers. Second, in the name of speed, quality will not suffer. And third, even if there is error by standard setting department, the impact would be less. Yes, we have one observation about the efficiency and bonus. If our efficiency is up to 200%, yes, Rowan will be paying you more than Halsey. At 200%, Rowan and Halsey will both be equal. And if our efficiency is more than 200%, Rowan will be paying you less than Halsey. It is an observation which we have to keep in mind. Then we have all the miscellaneous areas. First is the treatment of idle time. What is idle time? It is the difference between the hours worked and the hours for which payment is made. I worked for 5 hours, but I'm getting payment for 8 hours. The 3 hours is the idle time. Idle time, I can bifurcate it as normal idle time, abnormal idle time. Normal idle time is generally unavoidable. Abnormal idle time, it is generally avoidable. And one more, it also includes the events which are not in control of anyone. Say, for example, we have earthquake. Abnormal idle time, the cost will be transferred to costing P&L. Simple. Normal idle time, what we do, the amount of, yes, normal idle time, it will be charged to the cost of the product. How we can do it? We have two different treatments. One is we can inflate the labor rate and then show it as direct labor. Or the second one is we can charge that amount to factory overheads. Even if we do that, the amount will be charged to the product. Clear? Then we have overtime. What is overtime? It is the time for which employee is working beyond the normal hours. Yes, employee is required to work for 8 hours, but he is working for 10, 12 hours. Yes. So if he is working overtime, we have to pay him more. Suppose for the normal working hours, we are paying him only 100 rupees. It is normal rate. Yes. If he is working overtime, we have to pay him more. Suppose we are paying, say for example, 250 rupees per hour for the overtime. Yes, then the overtime rate will be rupees 250. Again, overtime rate, we are going to bifurcate it as normal rate and overtime premium. Here, 250 is the total amount paid. We are telling rupees 100 will be paid even if he is working in the normal hours. So what is it that we are paying him extra because he is working overtime? It is rupee 150 per hour. Yes, this is the overtime premium. We need to know how do we, yes, we need to know how to account for this overtime premium, yes, in our books. Firstly, it varies on different situations, different scenarios. If overtime is worked on customer's request, then the overtime premium will be charged to that customer's job. If overtime is worked due to mistake of some other department, this overtime premium will be charged to that other department. If overtime is worked due to some abnormal reasons, then it will be transferred to costing P&L. If overtime is worked throughout the year due to shortage of employees, then what we do? We charge it in direct labor by inflating the labor rate. If overtime is worked occasionally to increase the output, say for example during Diwali we want to work overtime just for that specific time, then what we do? The overtime premium will be charged to factory overheads. Clear? We have one final concept, that is the calculation of labor cost. Yes, we have gross wages, total labor cost, and net wages. What is it? Let's discuss this with the help of an example. Yes. So basic wages 1000 rupees plus dearness allowance 500 plus bonus 300 plus commission 2000. This gives us 2000 rupees. What is it? It is the gross wages. Employer tells, this is the gross amount I am incurring for you. Yes. But apart from this, he also has to make some amount towards ESIPF, which is not to employee, but it is to government. But ultimately, from employer's pocket, this money is also going. So for gross wages, we add the employer's contribution, we get the labor cost. What is labor cost? Employer is telling totally, this is what is going out from my pocket. Yes. Then we have the net wages. What is net wages? Employee is telling, yes, this is what I'm ultimately getting in my pocket. Yes. Employer is telling, see, for you I'm incurring 2500. So employee is telling, okay, you are incurring 2500, boss, but from this 2500, 500 rupees is your contribution to ESIPF. That I'm not getting, that you reduce. Yes. So employer's contribution is reduced. Again, yes, government, yes, the rule tells that whatever is the amount employer is contributing, employee should also contribute the same amount. So you take 500 rupees from my wages and that also you deposit to government. That also I'm not getting. Employee's contribution also I'm not getting. So net I'm only getting 1500 rupees. This is the net wages. That is the amount the employee takes back home. Is it clear, student? How is everything going? Yes, still have the energy. We have 2 more chapters. We have overheads and activity based costing. So let's go to the next chapter, overheads. Again, a very important chapter from the exam perspective. Every attempt we have on an average 7 marks from this chapter. In addition to this, we have the chapter activity based costing, which is just an extension of the chapter overheads. That chapter will be having 10 marks in every attempt. So collectively, every attempt, we are having 17 marks from the chapter overheads and activity based costing. Firstly, let's begin with the basics. Yes. So we have certain issues in charging overheads. Charging overheads is not that easy as charging material or labor. Because in material, we know on a one-to-one basis what is the material cost, what is the labor cost. But in overheads, on a one-to-one basis, we are not in a position to directly associate. First issue. Second issue is the actual overheads. I'll get to know only at the end of the year. Yes, but I want to set the selling price on day one itself. Yes, I cannot wait till the end of the year to know the actual cost and then set the selling price and sell the goods next year. I want to know what is the overhead cost per unit on day one itself. I won't be knowing actual overhead. So what I do, I take estimated overheads. So the second issue is estimated overheads may not be equal to actual overhead. Third issue is the estimated basis which I take on day one to distribute the overheads. That also will not be equal to actual basis. So we have these 3 issues. But still, can we take a decision to not distribute overheads? No. Why? Because we don't have overheads, we don't get total cost. We don't get total cost, we can't set selling price. We can't set selling price, we can't sell goods. So, despite all these problems, we have to find a reasonable basis. We have to make a logical basis to distribute the overhead cost to the cost object. This process is called absorption of overheads. The process of charging overhead to the job batch cost object making a logical basis is called as absorption of overhead. Then we have discussed what is the procedure of distributing overheads. Yes, first we estimate what my total overheads would be. Yes, I've estimated my total overheads for the upcoming period would be 10 crore. Yes, now I don't know how much it will be for a one unit, but what I can do is I can link it with certain basis so that as and when this basis increases, my overhead cost increases. So what I do, I get the total overhead, I link the overhead with suitable basis. What all basis could be? Basis could be material cost, labor cost, prime cost, labor hours, machine hours, units. Yes, I've taken the total overheads, I've linked it with the basis, I get the overhead recovery rate. And once I've received the overhead recovery rate, using the overhead recovery rate, suppose the overhead recovery rate is say rupees 100 per unit. I know for every unit 100 rupees I add as overhead. Or say the overhead recovery rate is 10% of material cost. To manufacture a phone, suppose my material cost is 3000 rupees. So therefore, my overhead will be 10% of 3300 rupees. Yes. So using the overhead recovery rate, we can charge the overhead to the customer. What is the procedure? First, we get the total overhead. Then we take the overhead, link it with a certain basis. When we link it, we get the overhead recovery rate. What is overhead recovery rate? It is nothing but overhead divided by basis. And using the recovery rate, we charge overhead to the cost object. Then we have the different methods of charging overheads. We have the single rate or blanket rate. We have the departmental rate. And then we have activity based costing. Yes, in all three methods, the procedure is the same. We take the total overheads, we compare it with basis, we get the overhead recovery rate, and using the recovery rate, we charge it to cost object. But what is the difference? What we do in single rate? In single rate, we take the total overhead of the organization. We tell total overhead is 10 crore. We compare it with one basis, say for example, material cost, we get one recovery rate, and using that one recovery rate, we charge overhead to cost object. This is single rate. What is departmental rate? Departmental rate, we don't want total overhead of 10 crore. Tell me the overhead department wise. So in departmental rate, we get the overhead department wise. When we get the overhead department wise, we have 5 departments, we have 5 different overhead costs. For every department, we want one basis. Yes, so we take one basis for every department. Based on that, we get the overhead recovery rate, and using the overhead recovery rate, we are going to charge the overhead to the cost of. In activity based costing, what is it we are going to do? We want the very detailed explanation of overheads. We want to know what is the activity wise overhead breakup. So we go even more detailed. Suppose 10 crore. Yes, we split it between departments. We have 5 departments. Now we are going between activities. Suppose we have 100 activities, and say we have activity 1 10 lakh, activity 2 12 lakh, activity 3 15 lakh, so on and on and on. So that total we get 100 crore. So we get the overhead activity wise. Yes, and we compare it with one basis for every activity, get the overhead recovery rate, and using the recovery rate, we are going to charge the overhead to the cost of. This is the general procedure for single rate, departmental rate, and activity based. Yes. Then we have the 5 steps of departmental rate method. What is the general procedure? First, we arrive at total overheads. Then we compare it with the basis. We get the overhead recovery rate, and using the basis, we are going to charge overhead to the cost of. In departmental rate method, what is it that we are going to do? To get the total overheads, what is the steps we need to follow? First, we need to do allocation. Then we need to do apportionment. Then we need to do reapportionment. What does it mean? Suppose we have overheads of a specific department, we can directly transfer to that department. Say for example, we have a department hardware. Yes, there we have incurred a rent of 10 lakh. I know this rent of 10 lakh is only for hardware department. So I can directly distribute this rent of 10 lakh to hardware department. This is allocation when cost is incurred only for a single department. What is apportionment? We have a common cost which is incurred by multiple departments, and we need to split it between the multiple departments. Say for example, we have a common rent of 10 lakh which needs to be split between hardware, software, assembly, repairs and maintenance, etc. Yes. So what we do, we have to take some suitable basis of consumption of service, and based on that we need to distribute the total rent between these departments. Yes, this is called apportionment. What is allocation? Cost is directly available, we put it to that department. What is apportionment? We have common cost, we need to distribute between various departments, we call it apportionment. Next, we have reapportionment. What is reapportionment? We transfer the cost from service departments. Yes, we'll be having two different departments. One is the production department, one is the service department. Production department is actually engaged in production of goods or services. Service department is a department which provides service to production department. It is not actually engaged in production of goods or services. Yes. So what we want to do from service department, we want to transfer the overhead to the production department. Why we're doing it, we will discuss it later. But once we've done it, what we get? We get the allocation, apportionment, reapportionment. We get the total overhead department wise. For production department 1, this is the overhead. Department 2, this is the overhead. Department 3, this is the overhead. Once we've got the total overhead, we can compare it with the basis. We get the overhead recovery rate. Overhead recovery rate is nothing but overhead divided by basis. And once we've got the overhead recovery rate, we can charge the overhead to the cost of. This is the 5 steps of departmental rate method. What is it? Firstly, allocation. Next is apportionment. Next is reapportionment. Yes, we got the total overhead. Yes, using a suitable basis, we get the overhead recovery rate, and using the overhead recovery rate, we will charge the overhead to the cost object. Now let us look at reapportionment. Why we are doing reapportionment and how we are doing reapportionment. Yes, in reapportionment, we transfer the cost from service department to production department, so that ultimately from production department, the cost can be transferred to the cost object. Why we are doing this? Because from a service department, we cannot directly create a link with the cost object. Suppose we have canteen. Yes, canteen cost of 10 crore. How much is the canteen cost to manufacture one mobile phone? We cannot directly create that link from service department to the cost object. But what we can do is from canteen department, that is from service department, we can create a link with production department. Canteen cost of 10 crore is incurred. It is incurred for 10 lakh employees. And in production department, hardware department, we have 5 lakh employees. So this is the cost. Software department, we have 3 lakh employees. So this is the cost. In assembly department, we have 1 lakh employees. So this is the cost. So from service department, we can create a link to the production department, and from production department, we can create that link with the cost. What we do? From service department, we transfer the cost to production department, and from production department, the cost is ultimately transferred to the cost object. Yes, one more thing, allocation plus apportionment is together called primary distribution of overheads, and reapportionment is called secondary distribution of overheads. Now we have the different methods of reapportionment. We have direct redistribution, step ladder method, and reciprocal method. Yes, simple example to remember this. Direct redistribution is like breakup, step ladder is like one-sided love story, and reciprocal is like a proper love story. What is it? Yes. In direct redistribution method, service department provides service to production department. Yes, that is happening everywhere. But one service department and other service department, there is no service happening to each other. There is a breakup. Yes, step ladder method. Service department is providing service to production department. That is always happening. But between the service departments, one service department is providing service to other department, but the other service department is not providing service to the former service department. Reciprocal method. What is happening? Service department is providing service to production department. Well and good. Between the service departments, one service department is providing service to other service department. Other service department is also providing service to the former service department. Yes, clear? Now, how to distribute? Direct redistribution is very simple. Question will give us the ratio in which we need to distribute. We just go on distribute it. Simple, end of the story. Yes, we take service department 1 cost, we distribute to production departments. Service department 2 cost, we distribute to production department. End of the story. Step ladder method. One thing to be kept in mind. What is the order in which we need to distribute? We need to The service department which provides service to maximum service department has to be reapportioned first. Yes, the overhead of service department which provides services to maximum service department, its cost needs to be distributed first, and we need to go so on in the descending order. Yes, if we know that, we can distribute cost using step ladder easily. Then we have the reciprocal method. How do we distribute the overheads? Again, we have three methods. First is the repeated distribution, then we have the trial and error, then we have the simultaneous linear equation. Repeated distribution, what it tells, don't use your mind, go on distributing till the time overhead at service department becomes very small. So what we do? We go on apportioning till the time overhead at service department becomes very small. And in the last reapportionment, what we do? We transfer the overheads only to production departments. We distribute the overheads only to production department. Why? Because ultimately at service departments, we want the overhead cost to be zero. This is repeated distribution. Next, we have trial and error method. Yes, we have trial and error method. We have simultaneous linear equation method. What these both methods tell? More or less, the steps is simple. What they tell is first arrive at total overhead at service department. What is the total overhead at service department? It is nothing but overhead as per primary distribution plus share of other department. Yes, then first arrive at the total overhead at service department. Once you have arrived at total overhead at service department, then you reapportion using whatever is the ratio given in question. Second step is simple. First, we need to see how can we arrive at the total overhead at service department. In trial and error method, what we need to do, we need to prepare a working note wherein we only take the 2 or 3 whatever is the service departments we have. Yes, we have service department 1, we have service department 2. Yes, so we go on distributing the cost of one service department to the other service department only. Yes, we go on distributing the total unapportioned overheads to the other service departments. We go on doing this till the time overhead becomes very small. We get the total overhead at service department. Once we receive the total overhead at service department, we will reapportion this to the all the departments available. Clear? Yes, just to show you. Yes, first we prepare a working note showing total overhead at service department. We have overhead as per primary distribution. At repairs and maintenance, it is 40 rupees. At HR, it is 30 rupees. What we do? We take overhead of one department, transfer it to other department. Yes, we take total unapportioned overheads. Yes, 30 plus 10, 40. Yes, we distribute it to other department. Yes, total unapportioned overheads. This is already distributed. This is not yet distributed. We take it, we distribute it to other department. Total unapportioned overhead. This is distributed, this is distributed, this is not yet distributed. We take it, we distribute it to other department. We go on doing it till the time the amount becomes very small. Once the amount becomes very small, we add everything, we get the total overhead at service department. And once we've arrived at the total overhead at service department, yes, the ratio of distribution will be available. Using that ratio, we distribute it to all the departments. And this is how we arrive at total, yes, overhead at production department. Yes, once we've arrived at total overhead at service department using that working note, we take the total overhead, distribute it to all the departments. We take the total overhead, distribute it to all the departments. That is how we get the overhead for every production department. Then we have simultaneous linear equation method. What is it this method is telling? It is also telling firstly arrive at total overhead at service department. But how do we arrive at total overhead? It tells take the total overhead as X and Y and then solve them. Yes, we have two departments, service department 1, service department 2. Take the total overhead as X and Y. Yes, we know total overhead is nothing but primary distribution. This will be available plus the share of other department. Suppose it is 25% of other departments total overhead is Y. Similarly for other department, yes, primary distribution plus the share of other department. Yes, solve this, get the value of X and Y, we get the total overhead at service department. Once we receive the total overhead at service department, yes, take the ratio, transfer it to the production department. Yes, Simple. The three methods for reapportionment where reciprocal method is used. Clear? Yes. Some important points from the exam perspective. Firstly, we have the blast from the past. Firstly, we have direct material, direct labor, direct expense in service department. What is it we are trying to do? We are distributing the overhead cost. So generally, direct material, direct labor, direct expense should not be coming in our overhead distribution statement. Yes. So if it is indirect material, indirect labor, indirect expense, it will always come in overhead distribution statement. But direct material, direct labor, direct expense, they form a part of prime cost. So they should not be coming in overhead distribution statement. So if direct material, direct labor, direct expense is incurred in production department, they are incurred for production of goods or services. So they will not be coming in the overhead distribution. But direct material, direct labor, direct expense incurred in service department. Service department itself is not incurring, yes, doing any production of goods or services. So any cost in service department will be indirect cost for the company as a whole. So even if question is telling it is a direct material, direct labor, direct expense, if it is in service department, it will be treated as overheads and it will come in the overhead distribution. Clear? Yes, we also had a master chart wherein whatever is the item and what is the basis of reapportionment, what ICAI is following, that was also discussed. Yes, with this we have finished the 5 steps for departmental rate method. Yes, we have 2 more concepts pending. One is machine hour rate. What is machine hour rate? It is the rate per machine hour. We want to know if our machine is running for 1 hour, what is the cost? How do we get it? It is nothing but total cost divided by machine hours. Yes, in simple, what is the total cost we'll be taking? It is nothing but our overheads divided by machine hours. Yes, overheads. What do we do for overheads? We prepare a statement wherein we bifurcate the items of overheads as standing expense, that is fixed cost, and running expense, that is variable cost. But it is not compulsory. If you can do it, you do it. You can't do it, you just put item by item and arrive at total cost. That is also fine. Denominator, we get the total overhead divided by the machine hour, we get the rate per machine hour. How do we get the machine hours? We need to take the effective machine hours. Why effective machine hours? Because ultimately we are recovering the total overheads only from the effective machine hours. What is effective machine hours? It is total hours minus setup time. Yes, so you've taken total overheads divided by effective machine hours, we get the machine hour rate. Machine hour rate, again, we have 2 different rates. Firstly, we have the direct machine hour rate. Second, we have the comprehensive machine hour rate. What we do in direct machine hour rate, we just take overheads divided by machine hours, we get the direct machine hour rate. In comprehensive machine hour rate, what is it we are doing? Yes, in the numerator, we take overhead plus other cost which is directly associated with the machine divided by effective machine hours. Say for example, yes, we take a JCB, we give it on rent. Yes, we take all the cost that is incurred, all the overheads incurred for JCB. In addition to that, for the driver, we are paying some amount. It is not overhead incurred for JCB, but still it is some direct cost which is associated with running the machine. So this also we add and we divide by the effective hours. We get a comprehensive rate telling for the machine as a whole, for the machine plus driver plus whatever is associated, this is the hourly rate. Yes, so that is the comprehensive machine hour rate. Then we have the final concept, under or over absorption. Here again we have 3 different things. Firstly, why does the situation arise? Next, what is under or over absorption? And third is how are we going to treat them? Firstly, why is this situation arising? Yes, we've told we want to calculate the overhead on the first day, but actual overheads we'll get to know only on the last day. So what happens? Yes, the estimated overheads may not be equal to actual overheads. Reason number 1. Secondly, estimated basis that may also not be equal to actual basis. Because of these 2 reasons, what is the overhead we have absorbed and what is the actual overhead we have incurred, they may be different. Because of this, we will be having under or over absorption. Yes. Then we need to know three terms. Firstly is the budgeted overheads. Next is the absorbed overheads. Next is the actual overheads. Budgeted overheads. On the first day, we are budgeting what will be the overheads for the coming period. Why are we budgeting? So that we can calculate the overhead recovery rate. Yes, that is why we are taking budgeted overheads. What is actual overheads? It is the actual amount of overhead incurred during the period. When do we get to know it? We get to know it only at the end of the period. Next, what is absorbed overheads? Yes, using budgeted overheads, we got a recovery rate. Suppose the recovery rate is 200 per unit. What we do? For every unit we are manufacturing, we are telling, okay, 200 is the overhead. 200 is the overhead. 5 units we manufactured, 5 into 200. 10 units we manufactured, 10 into 200. For every unit, we go on absorbing the overhead. How do we get absorbed overhead? It is nothing but overhead recovery rate into actual basis. So absorbed overhead is nothing but overhead recovery rate into actual basis. So what is under or over absorption? It is the difference between absorbed overheads. What is the cost I have absorbed? And what is the cost I have actually incurred? Actual overheads. Yes. So we may have three scenarios. Firstly, absorbed overhead is 90,000. Actual overhead is 1 lakh. 1 lakh is my actual cost. But I have absorbed only 90,000. I have absorbed less. So this is under absorption. That is when absorbed overhead is less than actual overhead. Second scenario, actual overhead is 1 lakh. Absorbed is also 1 lakh. Both are equal. So it is full absorption. That is where absorbed overhead is equal to actual overhead. Third scenario, actual overhead is 1 lakh. But the amount I've absorbed is 1.2 lakh. Have absorbed more than what is required. It is a case of over absorption. Yes. So what is under absorption? What is full absorption? What is over absorption? That is also done. Now, okay, we have known what under or over absorption is. The question is, how do we treat them? Yes, in our books of accounts. How do we treat under or over absorption? We have three different treatments. First thing is to carry forward to next year. Next is to transfer it to costing P&L, and third is to charge using supplementary rate. Example given, yes, we are at our home which is completely messy. Parents are coming. First thing, do nothing. It's our parents. Second thing, take everything, put it below the bed. Yes, take every amount of under or over absorption, transfer it to costing P&L. Yes. Third thing, keep everything in its respective place. That is, charge using supplementary rate. First, carry forward to next year. Company will not do anything. It will tell this year under absorption will be adjusted by next year over absorption. So chill. Transfer to costing P&L. When do we do this? If the difference is small or if the difference is due to any abnormal reasons, then we transfer the under or over absorption to costing P&L. And charge using supplementary rate. When we do it, if the difference is substantial, it is a big difference, or if it is due to genuine increase in cost, we charge the under or over absorption using supplementary rate. So how do we charge using supplementary rate? Yes, for example, overhead absorbed is 4 lakh, actual overhead is 5 lakh, under absorption is 1 lakh. So we tell where all this absorbed overhead has gone, to all those places in the same ratio, this under absorption should also go, so that ultimately it becomes profit. Yes. Firstly, where all absorbed overhead has gone. Yes. Suppose we have a recovery rate of 100 per labor hour. Is every hour labor is working, 100 rupees is the overhead. When labor is working, he is actually engaged in production of goods or services. So there can be two scenarios. Firstly, production is complete. He is engaged in production. Production is complete. That is, finished goods is manufactured. Secondly, it is still a work in progress. Yes, production is complete. Finished goods is manufactured. Finished goods may be sold. Finished goods may be unsold. Yes, still work in progress. It will still be in closing stock of work in progress. So their cost will be, if goods are sold, the cost will be in cost of goods sold. Goods are unsold, but it is the finished goods. The cost will be in closing stock of finished goods. And if it is still a work in progress, the cost will be in closing stock of work in progress. Yes. So absorbed overhead cost, it is transferred to cost of goods sold, closing stock of finished goods, and closing stock of work in progress. So under or over absorption should also be transferred to these three accounts so that ultimately we arrive at the actual cost in these three accounts. How do we distribute? Two scenarios. Firstly, question is giving us the rupee value, telling under absorption is 1 lakh. In cost of goods sold, we have 5 lakh. Closing stock, we have 3 lakh. Closing stock of work in progress, we have 2 lakh. Yes, what is the steps to be followed? First, arrive at supplementary rate. Take under absorption 1 lakh divided by 5 lakh plus 3 lakh plus 2 lakh. We get it as 10% of cost. Secondly, yes, charge using the supplementary rate. Is in cost of goods sold, we have 5 lakh. 10% is the under absorption, so it is 50,000. Similarly, to do it for finished goods and as well as work in progress. Secondly, if question is giving us the units, telling these many units are lying in cost of goods sold, finished goods and work in progress. First thing to be kept in mind is work in progress will never be 100% complete. The first step to be done is to calculate equivalent completed units. Yes, we have calculated it. We got 10,000 equivalent units are produced. Then, secondly, we calculate the supplementary rate, telling 1 lakh under absorption has to be distributed between these 10,000 equivalent units. We get the supplementary rate as 10 per equivalent unit. Then, using the supplementary rate, we are going to charge the under or over absorption. Telling cost of goods sold, we had 5,000 equivalent units into 10 per unit, we get 50,000. Similarly for finished goods and closing work in progress. Clear with this, students? Any doubts? Yes, everyone. Let's go to the final chapter for today's revision, activity-based costing. Again, a very important chapter. Every attempt we have 10 marks question from this chapter. It falls in the A plus category chapter. Believe me, if you have done overheads chapter properly, this chapter is very simple, very basic. Firstly, we have the three methods of charging overheads. We have single rate or blanket rate, we have departmental rate, and we have activity-based costing. Single rate and departmental rate, they are also called as conventional methods, traditional methods, or absorption method. Activity-based costing is called as modern method of charging overheads. So what is it that we are going to do in activity-based costing? It's simple. Yes. In single rate, we took total 10 crore overheads. We compared it with one basis. In departmental rate, what we did? We bifurcated that overheads between the departments and we took one basis for every department. In activity-based costing, we are going to go even more deeper and go like for every activity, what is the overhead? What is the factor that is driving the cost? That is what is the basis and what is the recovery rate? Using the recovery rate, we are going to charge the overhead. Yes, we already know the 5 steps in departmental rate method: allocation, apportionment, reapportionment, getting overhead recovery rate, and charging this. Using this, we will develop the steps for activity-based costing. In departmental rate method, we have bifurcated the departments as production departments, service department. Yes, in activity-based costing, the activities we will bifurcate it as primary activity, support activity. Primary activity, activities which are very much involved in production of goods or services. Support activity are the activities that are providing support to the primary activity. What was the first step in departmental rate method? We wanted to get the total overhead department wise. For that, what we did allocation plus apportionment plus reapportionment. In activity based costing, we want the overhead activity wise. How do we get it? Again, allocation plus apportionment plus the reapportionment. We get the total overhead activity wise. Then what we did in departmental rate method, we compared it with the basis, divided by the basis, we got the overhead recovery rate. In activity based costing also, it is the same. We divide it by the basis, we get the overhead recovery rate activity wise. And what was the final step in departmental rate method? Using the overhead recovery rate, we charge the overhead to the cost object. Same thing happening in activity based costing. Using the recovery rate, we will charge the overhead to the cost object. Yes, steps are exactly the same. Yes, but some terminologies have changed. Yes, say we have the total overhead activity wise. Yes, we are getting the total overhead activity wise. We give it a name. We call it activity cost pool. What is it? Activity wise, we are pooling the cost. We are bringing together the cost. That is called as activity cost pool. And basis, for basis, we are calling activity cost driver. Yes. What is that factor which drives the cost of the activity? Yes. Basis, we are calling it as activity cost driver. And overhead recovery rate, we are calling it as activity cost driver rate. Yes. At what rate this factor is driving the cost of the activity? So how do we get? Generally, we write it as overhead recovery rate is equal to overhead divided by basis. Here, what is it we are going to write? It is activity cost pool is nothing but overhead divided by activity cost driver is nothing but basis. We get the activity cost driver. As simple as this. Yes, this is all we have in activity based costing. In exam, if a question comes in activity based costing, they generally give you the data telling company was adopting the traditional method. They'll give you the data. Then they'll tell you now they are planning to adopt activity based costing. That data will be given. Firstly, we need to calculate the total cost as per traditional method, do all calculations. As per activity based costing, do all calculation, arrive at total cost. Then give a statement showing comparison of cost. Traditional method, this was the cost. In activity based costing, this is the cost. This is the difference in the cost. Yes, some golden rules for the chapter overheads and activity based costing. Firstly, prime cost per unit will be same in all three methods. Whether we follow single rate, departmental rate, activity based costing, prime cost per unit will be the same. These methods are only to distribute the overheads. Secondly, total overhead cost will be the same in all three methods. Yes, total overhead 10 crore. Single rate also it is 10 crore. In departmental rate also it is 10 crore. Just that we are distributing it as 5 crore, 3 crore, 2 crore. Activity based costing is also total overhead is 10 crore. We are just bifurcating between activities as 10 lakh, 20 lakh, 11 lakh, 12 lakh. But the total overhead cost will be the same in all three methods. And thirdly, if a company is manufacturing only a single product, then whether we use single rate, departmental rate, activity based costing, the total cost and overhead as for all three methods will be the same, because ultimately every cost is ultimately going into that single product. The total cost and overhead from all the product will be the same. Yes, with this we have successfully finished the chapter activity based costing as well. I hope this revision was of some value to you. Go back home, revise it once again, solve all the questions. Yes, go back home, revise it once again, solve all the questions. Yes, with this, we'll end today's session. Thank you so much, students, for being available, for watching it till the very end. And for all our students of crack costing, today evening, 7:30 to 9:30, we'll be having a special session wherein for these 5 chapters, whatever is the most complicated questions, we are going to be solving them. Yes, if students feel from the study material or from the RTP MTP compiler, any question is very difficult, do share it to us. We have shared the Google form yesterday only. We will make an attempt to make every complex problem simple for you. Yes, thank you so much, students. Have a great day.